Hi, good morning and welcome to Rathod Dialogue. Yesterday we had a discussion about the diamond versus gold, why people don't buy diamond and what is the reason behind that. Already I had a discussion with all of you. So today's topic is very interesting, uh, because the latest gold rate prediction in India, because as you know that from the last 1 year, the gold rate is going very high, sometimes is getting low because of the socio-economic condition. But the latest gold rate prediction in India, that is from June to December 2026. So gold prices in India have corrected from their early 2026 high and are currently moving in a volatile range. So recent report indicates the weaker global investor demand, a strong US dollar, expectation of higher interest rate have put short-term pressure on gold price. So what is the current rate? As you know that the first point is gold demand in India has improved slightly as prices have fallen from the recent peaks, so attracting jewelry buyers. The second point will be the inflation concern. So geopolitical tension and the central bank gold purchases continue to support the long-term outlook. So my outlook for India will be, there will be two factor, one is I'm going to compare with the periods and the second with the expected trends. So first period, the next 1 to 3 months, like sideways to slightly positive, and festive season during August to November likely upward due to wedding and festive demand. And end of 2026, some moderate appreciation possible if global uncertainties persist. Now the key factor that can be pushed gold higher. The first point is like the rupees depreciation against the US dollar, rising inflation, geopolitical tension, a strong wedding and festive demand in India. So continued buying by the central bank. The key risk will be the first, a stronger US dollar, second will be the higher global interest rate, and the third is the reduced ETF and investment demand. For the jewelry business, since you work in the jewelry sector, the period from August to December 2026 could see a stronger customer demand due to Raksha Bandhan, Dhanteras, Deepavali and the wedding season. If the gold price remain below previous high, so jewelry sales may improve further. Now, gold prices prediction will go will gold cross 1.60 lakh per 10 gram in coming days? Yes, of course. The gold price prediction in 2026 will gold cross 1.60 lakh per 10 gram. This is expected. The short answer is yes, if it is possible, but it will depend on the global economic condition, inflation, interest rates, the US dollar and the Indian demand during the festive and wedding season. Recent correction has pushed gold below its earlier high, but many analysts still expect high price later in 2006. So current situation is what exactly in India? Indian gold price recently fell to around 1.46 to 1.50 lakh per 10 gram after a sharp correction from the earlier peaks. And the physical jewelry demand in India has started improving as lower price attract buyers. And the thirdly, inflation concern and geopolitical tension continue to support gold as a safe haven assets. So possibly scenario for 2026, there will be three scenario. One is the bear case, the second is the base case, and the third is the bull case. So if you doesn't know about the bear case, base case and bull case, first I am going to explain you that. Like bear case is the negative scenario basically. This is the a pessimistic outlook where gold price fall on or remain weak. The reason is a stronger US dollar, higher interest rate and lower inflation, reduce investor demand for gold. So, like example, gold may trade around 1.2 to 1.40 lakh per 10 gram. And the second is the base case, most likely scenario. This is the expected or most probable outcome based on current information. The reason is moderate inflation, stable economic growth, normal wedding and festive demand, no major global crisis. Like example, gold may trade around 1.60 to 1.70 lakh per 10 gram. Now the bull case, that is positive scenario. This is the optimistic outlook where gold price rise significantly. Like reason will be the gold economic uncertain, wars or geopolitical tension, high inflation, a strong central bank buying or weak rupee. So example is gold may rise to 1.85 to 2 lakh rupees per 10 gram. So simple example is that only. Now I'm coming on the possible scenario that I wanted to discuss in this 2026. The base case will be 1.2 to 1.40 lakh. The base case, this is the bear case, sorry. Base case will be 1.60 to 1.70 lakh. And the bull case is 1.85 to 2 lakh rupees. That is per 10 gram. So several market forecasts place the consensus outlook around 1.70 lakh per 10 gram, while bullish forecast extend towards 1.84 to 2 lakh inflation. So central bank buying and geopolitical risks remain elevated. So factors that could push gold above 1.60 lakh: rising inflation in India and globally, weakening Indian rupees against the US dollar, a strong wedding and festival demand, continued gold purchase by the central bank, and the global geopolitical uncertainty. This is the factor that could push gold above 1.60 lakh. Now the second factor that could keep gold below 1.60 lakh, there will be a chance of higher US interest rates, a stronger US dollar, a reduced investor demand for global gold ETFs, or improvement in global economic condition. This is the factor that could keep gold below 1.60 lakh. Now, what is my assessment after seeing all this scenario of the market in India or globally also? For the second half of 2026, a move back above 1.60 lakh per 10 gram appears achievable, especially during Dhanteras, Deepavali and the wedding season. The sustained move significantly above the level would likely require renewed inflation concern and major geopolitical developments. So this is the thing that we have to take care of. And the lastly, as I said, that bear and base and bull case is clear as of now. Okay, so once again, just watch my channel. I'm going to give you this kind of information on every day. So please bear with me, and if you like this channel, please subscribe and continue support me. So thank you.